we have one of the best eligible speakers in this field. Our speaker, Mr. Saleh Hussain, has a master's degree in business from Brunei University, UK. He has over 35 years of experience in various fields of banking in this region as well as Europe and Asia Pacific. Presently, he is heading Saleh Hussain Consultancy, which is a leader in corporate governance in Bahrain and has a motto which says, winning through good governance. He served and continued to serve on a number of boards and banks. Some of his memberships include board member, Sole Director General Takaful Holding, Arab Financial Services Bahrain, Head of Audit Committee, Al Kabir and Al Majdu Group, Saudi Arabia, board member in Bahrain Development Bank and ABC Islamic Bank. He authored a number of books on banking, management, and corporate governance, including Corporate Governance, Middle Eastern Perspective, A Life in Banking, and Authentic Governance. As I said, he is the best person to talk about corporate governance. Ladies and gentlemen, please put your hands to welcome Mr. Saleh Hussain.
Good evening. Hello, how are you? I don't know, I look around and try to count the number around here, and maybe you are 200 to 300 people, and I'm trying to find out if I can master 300 words, good words to say. So please wish me good luck for all of this.
Best of luck.
Thank you very much. Okay, I would like to start my talk this evening by asking you to promise yourself, if you cannot promise me, to always think that corporate governance is not a new word, is not something created today. It's not something, it's not a gimmick that has been invented, is not an Atari game that has started. Corporate governance is as old as humanity, and I will tell you why. But before that, remember that bad and good is always created and practiced by people. The only exception is the Mother Nature, when you have acts of nature, but even that, you cannot all the time blame it on nature, because we human beings contribute to these disasters. So the good corporate governance is practiced by you. Good people practice good corporate governance, and bad corporate governance will be practiced by people who are not doing the good. So remember that. And when I say corporate governance is very old, and it is as old as humanity, just remember that Eve and Adam were created by God. Most of the beliefs, religions say that to us. We believe it. And what happens? God has given from day one corporate governance. Governance, you call it, because corporation were not there then. And of course, we all know part of the requirement under any good corporate governance is a code of conduct. So the code of conduct given to Eve and Adam is don't do this, don't do that. And what happened? The first non-compliance was by Adam, where he ate that apple, and we ended to be all in the earth. So that was the non-compliance. And the point I'm trying to make here is it is very old. It's all about a framework of ethics that we all have to be guided with. And it's on the business level, it is on the personal level. And let me go to the presentation here. These are the areas that we're going to cover. What corporate governance, we'll talk more about that. We'll talk about the personal and family governance and aligning the personal governance with corporate governance. And then we'll end up talking about emerging practices, not only as far as CEO is concerned, but other areas of business. We just gave the example about the as old as humanity. The second one, there are many definitions of the corporate governance, and I don't want to go through that, but it is basically the framework within which sets of rules and regulations are there to direct and control any organization. It's as simple as that. And some people will define it simply, it's the way the decisions are made in any company. If you look to an organization chart, you can immediately tell whether that organization has a good governance or bad governance. If you see conflicting roles, conflicting gadgets there in the organization, you know there's something not right. If we talk about personal governance, this is where we start. We have to look into governance not because it is rules and regulations. And remember, Tom Peters, who has happened to be in Bahrain nowadays here, has a saying. He says, rules are for fools, i.e., good human beings do not require regulation and rules. They have that inbuilt in them. Part of our being, we like to do things good, not the bad things. So on the personal level, if you look at yourself, and if you have good governance on personal level, mean you take care of yourself, you take care of your education, you take care of your children, and also within good ethical standards, then means that you have good personal governance. Same thing goes for the family. If you look after your family, and the family does things within acceptable ethical standards, it means the governance of that family is good. And if both the personal side and the family side take that to a company, then certainly they will apply what is in them on the operation of the organization, and they will have good corporate governance. You look from what you see here, on the personal side, look at yourself, you are a brand. If you talk about Bill Gates, immediately you know he is Microsoft. If you look to Jobs, Allah yarhamah, is passed away, you know you're talking about his invention, and so on. So if you think about yourself as a brand, then you will have to come up with what are your personal ambitions, what are your personal business scorecard, mission in life, objectives in life, and it is no difference than what you do today for your corporate, i.e. you will have to have mission, you have vision, you will have business scorecard, you have objectives, and so on. So you have to align that. And actually, in a recent book that was launched recently, and I've written that in association with another gentleman who is good in personal branding, we called the book Authentic Governance, i.e. the real governance has to stem from the idea. Why if you take care of yourself and know what to do on personal level, set your objectives, then you can apply the same thing on the corporate that you're working for, and you will end up having good corporate governance. This is, as you all know it, and when you look at any website, any annual reports, any documentation, you will find this is what most of the companies work on, and they all talk about corporate mission, corporate vision, and values, and so on. And the same thing, you take the same values here, and you put them in the balance scorecard, which is also filtered around aligning the personal side with the corporate side to come up with a corporate balance scorecard. Having said that on the quote, and I think, I don't know whether you still can promise yourself that there is no new thing called corporate governance. I just want to say a few words on that before I move to the emerging practices. There are reasons, of course, that has emphasized the importance of corporate governance. And I can mention only 4 or 5 of them quickly. One of them, the shift in power, or power shift between private and public. What do I mean by that? Private companies going public, they get listed, and vice versa. Government companies get privatized, and what happened as a result of this, you have listed companies with so many shareholders, so many international investors. This is all creation of different relationships that need to be organized. They need to be regulated, and hence you have the regulation. The second reason, you have a globalization. Globalization means you are not only working in your own country, but you have branches, you have subsidiaries outside. So that also, again, creation of more relationship. Actually, with that, you have also the nationalities and the traditions in each company. How do you have a code of conduct to tell people you should treat everybody equally? And this is another reason, the globalization. The third reason I can think of is the financial crisis and all what came with it. You all know it, and you know what happened in the financial crisis. They actually highlighted areas of conflict of interest, conflict of roles. People are not adhering to ethical standards and so on. And then we can add to it one more reason, the non-financial crisis. And this is, which is a bigger issue, this is what's happening in the Arab Spring, what we call. And this is all the corporate governance at the government level. These are all good reasons, created a lot of issues and relationship that necessitated the importance and the emphasis on corporate governance. In the emerging practices, we'll cover these: the CEO and the board, the role of internal auditors, disclosure, and so on. Let's start with the role of CEO. There are talks now and a lot of articles going around because, you know, the CEO in a good number of companies sits on the board as a board member. But his role, we all know, he is the key person. He is a board member, he is the chief executive, he is the spokesman for management and the board. And this creates a lot of conflicting roles. Does he sit there to present the interest of the management or the board or his own? So this is now changing, and that conflicting roles in the arena of the word is changing, and you might well hear in the future that a CEO cannot be a board member. We know there are people who come and say no, but this is, I'm just telling you, these are the trends are coming new for the corporate governance practices. Role of internal auditor, increased regulation, and they are now part of the approved person list. They have to make reports to the regulators, and they get interviewed to be appointed. All of these happening because of the internal audit and control issues that need to be strengthened. I'm sorry I'm going a little bit fast because I wanted, maybe later on if there is any questions that you can ask me. On the disclosure and transparency, you look at any annual report effective last year, and you will find in each annual report almost 20 to 30 pages of disclosures that were not there before. This is today the names of the auditors, the board members, their background, how many meetings they have attended, how much money they have got, and so on and so on and so on. So these are going to be increasing because social responsibility is one of them. This will be also in the increase because of the importance. And if I have to stop a minute and talk about social responsibility, some still think they actually make a favor to the society to address social responsibility. They forget that as companies, they wouldn't have existed without the society itself. So this is an area that will also receive more regulation and importance as we go along. Board committees, this is the remuneration. It's been questioned. Recently, CBB has issued directives on how you actually handle the remuneration. It's not, it comes on cash, deferred basis, and even the level, you cannot give people so much more than X amount for attendance and so on. So there will be more and more because the remuneration is one of the major reasons that was discovered that contributed greatly in the financial crisis in the United States. And if I may give one example, the AIG, which is the biggest American insurance group, were rescued by the government by putting 85, then it was increased to $100 billion for the good of the country, USA. And what happens next day? $200 million, actually $195 million was paid to the board of directors and executive management. You know, this is the human greed at its best, at its peak. This is what happened. While the company was going down, it was rescued. The money came from the taxpayers, and they still get themselves paid. That's why you will be getting more regulation on remuneration, and also more disclosure will be there. So God help all of you who would like to be on a board. Corporate governance on subsidiaries. We know that in certain cases, the financial crisis highlighted as well that some of the SVPs, subsidiaries, were created for wrong reasons, either to evade taxes or money laundering, or even for good reasons on the real estate business. So many of them, for each and every investment fund, there is SVP. Unfortunately, for many years, and we can say this to some extent in Bahraini investment banks, they've done that. And what happens, you will see that the capital of the bank itself, an investment bank or any bank, say 100 million, while these SPVs sit on assets worth billions. And they do not apply the corporate governance practices on these SPVs or subsidiaries. And the result, anything goes wrong, the mother or the group bank will actually suffer greatly. And this has happened not only in Bahrain, but worldwide. Therefore, the SVPs and subsidiaries governance would be subjected to more regulation. Especially part of the governance, most of these are actually put under the management of the executive management themselves. The role of CFOs, and when I talk about CFOs, your internal auditors included, and risk managers and everything. This is what you have now. At the time of financial crisis, that's not something I can entirely agree to, but you were blamed partly for what happened there. And if you read some reports, it says the financial controllers, people in the finance and risk managers would receive someone as a CEO like myself, say, please, give me a good balance sheet. So they will do their evaluation, inflate the balance sheet, and it goes out. More investor rating agencies give you the best rating you want, and then you have, whether you like it or not, contributed to the partly of the crisis that came thereafter. Of course, that doesn't negate in any way the importance need of all of you, but that are some of the claims about that. They were doing a lot of what's called financial engineering. And that is now, as a result of that, you'll see there will be increasing requirements. We already saw a lot, IFRS, IAS, and many, many more coming. Regulators' requirements for approved persons, risk takers. You also become, if you want to get a job, you need to also go through a process that somebody called regulators must accept you first. So this is all addition because in response to the crisis that took place. Regulators and new introduced requirements, control function. I wanted to talk about this because that's part of it. These are the functions or the people they would like to include in the control function. And you see the list is long. Actually, it spares nobody. It does spare nobody. Everybody will be in that, and I don't know to what level it will go, but this is all in response. And this is not necessarily going to be helping the corporate governance. As I said, we have to pay attention to educating people, making people aware of the requirement. So if you get your human capital educated in corporate governance, they will do it right because they do not have time to look at regulation. They have to think it from their own and know to do what's right, what's not right. Risk takers, also again, this is what they talk about. Heads of significant departments, business lines, individuals. And funny enough, I've seen it in a couple of guidelines in GCC. If you read the corporate governance guidelines, it says they call them, instead of the risk takers, they are also called customer-facing people. So ladies and gentlemen, stop facing anybody. Because if you do face somebody, you are a risk taker and you will be required to be seen by regulators. It's getting that down to that detail because of the issues of lack of corporate governance. So, as a result of this, be aware of the challenges. These are some of the challenges that are going to be in your way. Actually, in the discussion, it was mentioned that you look at the quality side of corporate governance rather than the quantity side. The quantity, if I look at all of you and you come and tell me I'm looking at an accounts of an institution, and these are the financials. I said, please, I don't want you to talk to me about figures. Figures are produced by computers more efficiently than me and you. So, and you cannot say I've done them. No. I would like you to talk about the quality side, how these figures came about, how the evaluation were made, how the disclosures are accurate, and so on. So this is one of the areas. So please look at these areas. These are your future challenges. Impact of crisis on companies' financials. This is very important. The early warning sign system you must have. Make sure that the companies that you audit or you work for have some system to give them an early warning about issues. Exposure with distressed parties. If you are dealing with companies and they are not paying, they are asking for more delay, and so on, especially in the banking world, you have to be a pressure on finance, compliance, internal audit, and risk managers for the reason we explained earlier. Outsource services functions. Outsourcing, this is, some people take it seriously, some don't. You all are full, your buckets on wallets are full with cards. And some of you might think they are actually processed in terms of the statement, debit, credit by the bank who issued the cards to you. Most of the time, that's not the case. They give this they outsource them to somebody else. And of course, there are other services. And if you outsource, it doesn't mean you are not responsible for the job that you're given to somebody else. So be aware of these outsourcing services agreements, and they are actually done properly. External auditors, close monitoring. That will be people who are in the internal or risk managers or managers look at all the external auditors closely. So it is the awareness within the company will be important. Market changing, including emerging practices in corporate governance. And then in conclusion, these are the area that you have to look at. Corporate governance needs to be associated with the human capital. Human capital. It's not about rules. It's about people. You have to educate people, spend the time on educating them. Training and awareness is the key. Aligning the personal and corporate governance is the far better way for good governance. The emerging practices will be intensified to cover evolving needs of business and corporation. And regulators will be on their toes and will certainly make sure that you have sleepless nights. With that, thank you very much for listening.